So you think you need a license to raise capital? Well, actually, most people do. And because of that, not very many people even get started in that business. But there actually is a legal, very strategic way to raise capital without ever holding a Series 7 or getting a FINRA registration. And today I'm going to show you exactly how that works. Look, I remember looking into capital raising for the very first time, and it felt like the door was always closed, right? You'd think I'd need to get a brokerage license or pass some kind of insane regulatory exam. But the truth is, you don't need to do that. There is a silver lining, but I have to say, one quick Google search will have your head spinning, right? You'll be finding a ton of different things to consider, all these different acronyms out there, legalese, compliance nightmares. So when most people see that, it's understandable that they just walk away. They never get into the game. But what they don't actually realize is that there is actually a completely legal model that doesn't actually require you to be licensed. You just need to be structured in the right way. So, what is that solution? I hear you ask. Well, it's called Regulation D, Rule 506C. It's companies that operate under that umbrella, the umbrella of Regulation D, Rule 506C. This is an SEC regulation, and it allows companies to raise money from accredited investors and market those opportunities publicly. So, real quick, what's an accredited investor? Well, it's someone that earns $200,000 a year for the last 2 years, or someone that earns $300,000 per year for the last 2 years with a spouse. Or, there's another or, they have $1 million in assets outside of their personal residence, so can't be their home. That's an accredited investor. So, under Reg D 506C, you can generally solicit, which means you can publicly advertise it, the opportunity, the capital raise, so long as you're taking money only from people that are considered accredited. So there's a key here, though. The silver lining is you have to be contracted directly by the company that you're raising money for. You've got to be part of their internal team. You've got to be considered to be part of that business. You cannot be considered to be an outside broker. All right. You are under their umbrella and you're helping raise for their one offering. You're not, and if you do that, you're not required to hold a license. That's the silver lining. But it's not considered a loophole, though. Just to be clear, this is a very clear legal structure that's been used by tons of businesses out there, real estate syndications, private funds, alternative asset companies, every single day. This is something that is plain as day. It's very consistent across the board. This is how many companies actually raise money under this regulation, the Regulation D 506C. So if you're someone who's actually looking to get into raising capital, but thought the barriers were too high, well, this is your in. You don't need a brokerage. You don't need to register with FINRA to get approved. You just need to plug into a sponsor, a company that's actually running a 506c raise, and then start having conversations with real high net worth investors, accredited investors. Look, to speak about how much money you could be making in this business, it's amazing. I mean, most sponsors pay anywhere between 5% to 8% as an average. And many pay higher than that too. But let's look at the 5 and the 8% here. I mean, if you're able to do a deal, let's say $1 million, at either 5% or 8%, on the low end, it's $50,000 that you'd be making on that deal, or $80,000 on the higher end. So even at lower volumes, like even if you just did a couple of those deals a year, it adds up fast. You could be on a 6-figure salary before you know it. And of course, if you're a fairly competent closer, you could be making tons of money, multiple millions. So let's be clear. This doesn't mean, this Regulation D 506C, roadmap doesn't mean that you can just throw offers around anywhere without knowing the rules. Like, remember, you have to be directly contracted by the sponsor. You must only promote their 506C offering, and they must verify. So the company must verify that every investor you bring on is in fact accredited. So long as you follow those rules, you're good. There are a couple of no-nos, though. The standard no-nos. I think I would have to ensure that you're aware of, because these are across the board, across all investments. You cannot make any false promises. That's a definite no-no. You never want to say the word guaranteed returns. Anything like that suggests certainty, or a claim like that. You've got to be careful not to say those types of things. There's ways around that. There's lingo that you can use. You are still operating in a very heavily regulated space, but if you stay within these lines, It's 100% legal and you can totally scale the business. So here's how to get started. Step one is you've got to find a sponsor, find a company that's trying to raise, right? But they're operating under the 506c capital raise. You've got to look for an experienced company, not just a company who's managed to pay a lawyer to put together the contract. You want to find an experienced operator that has a solid track record, a solid deal, a good pitch deck, a good onboarding process. Step two would then be to sign on with them, right? You want to sign on as a 1099 contractor or a W-2 team member. This will clearly define you as someone that's part of their internal fundraising team, not an outside rep. Step three would be to learn the deal inside out, upside down. Like you're not just a pitch robot. You've got to, you're selling an investment. You've got to totally, understand the opportunity. You've got to know where the risks are. You've got to learn how to articulate and communicate this to accredited investors. These are high net worth individuals. And step four, I guess, would be a bonus point. You're talking to high net worth individuals. So you're going to focus on building those relationships, cultivate those relationships. That's this whole game, right? It's all about building trust. You're not just raising capital. You're really helping people, investors, make smart decisions with their money. So in the next video, I'm going to show you how to actually find those sponsors. Like I said, it's not just about having a contract that says you can operate under Reg D 506C. You want to find solid companies that are operating under that umbrella. And then, of course, exactly what you should be saying to get their attention in the first place. How do you actually sign on with a company like that? Because, it's one thing to know the legal pathway to get involved in this business, but you also got to have the right relationships to actually activate it and become successful in it. So if you're serious about learning how to raise capital, and if you want to access tools, and if you want to access training, and you want to access sponsors out there that are already doing this, you can join our community. Now, look, inside our community, it's pretty straightforward. You're going to get a lot of in-depth education on the capital raising side of things and the compliance side of things. But most importantly, you're going to get real-time deals and opportunities and sponsors that you can actually work with. On top of that, you'll get the scripts, you'll get templates and support frameworks and infrastructure to work with. And of course, you're going to have a network of closers who you can work with as a mentee or even a mentor, depending on your experience level. We've got an ecosystem, a place where you can actually just kind of plug in and get started. So if you want access to that and you want to see what that's all about, then click the link below and learn how you can actually apply and join that community. And remember, you don't actually need a license to raise capital. You just need a plan, and you need a team, and of course a platform that can help you get started. So with that said, let's get to work.